Good morning, 3/16/2013, 9:02 a.m. Pacific Standard Time, updating our worldwide trader network. Whether you're a big account holder or a small one, it doesn't matter. What matters is how you're going to trade this bellwether bull on Google. When Google hit our price target right below 845, we have sold down $31 from these highs over here to this current level of 814. That's that lower end. This trend line is half of the weekly bar. The lower trend line is that lower support level. Google has been on a tear and a rip. Why? Because people sold what? This one here. Apple. AAPL. And what has happened is that people came out of Apple and went into the bellwether Google. So what Apple used to be trading all the way up to 702 and then dropping almost $300 off of those highs is that Google has replaced Apple. And the bigger money has gone parabolically up on a weekly level, starting over here at the bottom. And this was on 120 of 2013. And that the pullbacks on this particular name is going to be substantial. Why do I say it? Because it's the best bull trend year to date in any of these names. We hit monumental highs. We're going to buy the dips. It's got support here at 800 right here where this breakout, we came up off of this weekly level, and this was on 224 2013, where once we hit this level right here, we made that top in the next weekly bar. And now we have what we call a reversal, an overbought bull run that needs to come down to lower supports. Now, Google will report earnings in April again. But prior to then, it will be in a trading range. It'll be volatile with markets. One of the key things that I'll talk about this name is that lower support level, because it's working off the overbought process. We're only on a weekly level now. I mean, we were up here at 96% overbought. We had to come down, and we've come down $31 off of the high, and that was an 845 put that paid monumental, and it did. And then you had the weekly reversal in here. Look at the last weekly reversal that was in 113 of 2013, but let it be known that this was the beginning of this bull run, which made this bull run even much more powerful on Google, and that the dip buyers at certain levels around the $800 level are going to come in. And why will Google bounce off of the support levels? Here's how Google traded the other day. It's right here. 820 was the high, 813.34 is the low, with 109 lows versus 11 highs. Now, having said that, next week we have an FOMC meeting. There's going to be a lot of volatility, but the more that it works the overbought level off, the lower support levels will bounce off of these bottoms like in the trading, daily trading ranges very significantly. 780 is clear down here on the name where this wick started. Like I said, it had major support level where it got above this resistance level, above that half weekly bar. Every dip was bought, but now we just got overbought. You can see the reversal from the high to that high is lower, significantly lower. As far as the turn of the stock, the pullback in the stock creates buying opportunities. Why does it bounce off of lower support levels? Because it's the strongest bull at the lower support level. Buyers will jump in on this name. So we close at 813. The weekly chart's got support. When this thing hits the blue line, it's called the 10-week moving average. You can see when it tested the 10-week last time, it made 1, 2, 3, 4, 5, 6 positive up weeks to that calendar multi all-time high with lots of targets on it, $1,000 targets on it. And lots of analysts are doing the same thing they did on Apple. Oh, $1,000 target going to 1,000 is going to be the first one to do this. They're all wrong. They're all wrong. This name here, though, people want to own the dips. It's tradable up until the earnings. We'll be looking to see if it dips down to 800 and we'll trade it. Why does it bounce off of these support levels, stronger levels? Is because of the amount of bull trend that Google's in. When you take a look at the daily chart, it sold below the 10-day moving average and testing the 20-day right here on a daily. So it's a retail chart. It's a retail indicators. But nonetheless, the red line is a 20-day simple moving average. That upper line here of the 10-day at 827.90 would be your short-term resistances. You can see right here, just like I showed on the weekly, that the $800 area right here is that major support level right here to the major top level, to the daily reversal levels. It's working that $31 off of the high down here. It will bounce off of support levels very strongly. Be aware, high alert, bellwether bull run, Google, overbought level on a daily and a weekly, and it's working itself down. And this is the one that will make a lot of money in the options market. Buy the dips and sell the rips.